Today, I'll help you uncover hidden credit report mistakes that could be costing you thousands in higher interest, denied loans, or missed opportunities. You'll walk away with a simple system to check, fix, and protect your credit report so your score finally reflects reality, not hidden errors. Later in this video, I'll reveal the single shift that locks your report on autopilot so mistakes don't quietly return. Miss this, and you could spend years repairing damage you never caused. If your credit score dropped 50 points overnight, would you even know why? Segment 1. The Hidden Epidemic. Here's the uncomfortable truth. Credit reports are supposed to measure responsibility, but they often measure mistakes instead. Consumer Reports found that 34% of volunteers discovered errors on their reports. The FTC's landmark study showed 1 in 5 Americans had a material error affecting their score. MarketWatch reported that nearly 25% of Americans struggle just to access their reports, and among those who do, almost half find errors. That's not a rare glitch, it's a national problem. Imagine paying more for a car loan or being denied an apartment lease because of someone else's mistake in a database. If nearly half of reports have errors, what are the odds yours is spotless? Segment 2. Why errors matter. Your credit score is like a key. Every financial door, mortgages, car loans, credit cards, even some jobs, opens or slams shut depending on that number. A clerical error can cost you more than just money. It can delay or derail your plans. Here's the math. A person with a 760 score might qualify for a mortgage at 6.5%. Drop that score to 690 because of a false late payment, and you might pay 7.2%. On a $250,000 loan, that's an extra $112 every month. Over $40,000 across the life of the loan. That's the price of silence. If an error can cost you $40,000, how long can you afford to ignore it? Segment 3. The most common mistakes. The FTC and CFPB highlight the most frequent errors. 1. Incorrect personal info, a wrong address or mixed up social security digits. 2. Duplicate accounts, the same debt showing twice. 3. Payments marked late when you paid on time. 4. Accounts that aren't yours, often from identity mix-ups. 5. Old debts still showing after the 7-year limit. Each one silently drags your score like barnacles on a ship. You don't feel the drag day to day, but over miles, it slows everything down. Which of these mistakes would hurt your score the most right now? Segment 4. My real story. A close friend applied for a mortgage, confident his credit was strong. He had never missed a payment, but the lender's report showed 2 late payments on a credit card he had closed years before. He was furious, embarrassed, and scared. For weeks, he sent in bank statements, letters, and affidavits to prove the errors weren't his. The house he wanted nearly slipped away because of it. The lesson? Errors don't just reduce numbers on a page. They derail milestones, shake confidence, and force you to fight battles you shouldn't have to. If a lender pulled your credit today, what would they see that you wouldn't? Segment 5. The emotional cost. It's not just financial, it's emotional. Imagine walking into a dealership with excitement, ready to buy your first car. You sit down, sign the forms, and then hear the words, "Sorry, your credit isn't good enough." You know you've paid responsibly, but the report says otherwise. That moment of confusion, the flush of embarrassment, the sinking stomach, that's the invisible tax of credit errors. How would you feel being judged by a mistake you didn't make? Segment 6. The leaky report analogy. Think of your credit report like a resume. Every error is like a typo, or worse, a lie, that makes you look unprofessional. Would you hand a resume full of errors to your dream employer? Then why hand lenders a credit report you've never reviewed? Resumes get skimmed once. Credit reports follow you for years, shaping whether you're trusted or denied. If your financial resume is full of typos, what doors are closing before you even knock? Question of the day. Have you ever found a mistake on your credit report, and how did it affect you? Comment below. your story might save someone else thousands. Segment 7. The checklist. Here's your 3-step checklist to fix and protect your credit report. 1. Get your reports. Use annualcreditreport.com. Even today, you can pull each bureau's report for free once a year. Some banks also offer free pulls or summaries. 2. Scan for errors. Look for wrong accounts, duplicates, late payments you never missed, or accounts that aren't yours. Highlight everything suspicious and note the bureau and account number. 3. Dispute mistakes. Each bureau has an online dispute portal. Attach proof. Bank statements, payoff letters, ID copies, police FTC identity theft report if relevant. Be detailed. Dates, amounts, confirmation numbers. It's not glamorous, but it's powerful. 1 hour of attention could save you tens of thousands in interest and approvals. If you spent just 60 minutes on this, how much money could you free up in lower interest? Segment 8. The single shift. Here's the shift most people miss: automation. Errors don't just vanish, they creep back in. Data is resold, creditors misreport, or old accounts resurface. If you only check once every 5 years, you'll be blindsided. Set a quarterly reminder to review all 3 reports. Turn on free monitoring from banks, card issuers, or apps. Consider a fraud alert if you've had identity issues. It forces lenders to verify your identity before opening new credit. If you knew the moment your score dropped, how much stress would that save you? Segment 9. Real case study. 2 savers, same income, same bills. Person A ignores their credit. A duplicate medical collection and a false late payment drop their score into a higher rate bucket. They pay $100 more per month across loans and pay a larger insurance premium. Over 10 years, $12,000 plus lost. Person B checks quarterly. They catch the false late payment, dispute it, and keep a high score. Same loans, lower rates, $0 wasted. The only difference? It's called attention. Which person are you closer to today, A or B? Segment 10. Get started. If this feels overwhelming, remember, you don't have to fix everything at once. Start with 1 report, 1 error. Even removing a single false late payment can boost your score 20 to 30 points. That alone can unlock better card offers or lower your car loan rate. Progress builds confidence. What's 1 step you can take this week? Download, scan, or dispute. Segment 11. 1-page recap. Your 1-page defense plan. 1. Download all 3 bureau reports. 2. Highlight any suspicious account, balance, or late payment. 3. Dispute with proof attached. Keep records of confirmation numbers and responses. 4. Monitor quarterly so errors never sneak back in. Keep alerts on. Think of this like hygiene. Just like brushing your teeth prevents cavities, reviewing your credit prevents costly surprises. If you scheduled your first review tonight, what might you discover? Segment 12. Pro moves. Goodwill letters. If a real late payment was a one-off, ask the creditor, politely, to remove it after you've established a clean streak. Pay for delete. Collections. Some collectors will remove a small paid collection from reports. Get agreements in writing before paying. Utilization tune-up. Errors aside, keep card balances under 30% of limits, under 10% is even better, to maximize score gains. Age and mix. Don't close your oldest card unless necessary. The age of accounts matters, and a mix of installment plus revolving can help. Which pro move could you try in the next 14 days? Now that you know how to spot and fix credit report mistakes that could silently cost you thousands, you're going to need to know exactly how to build your score fast once it's clean. If you don't know this, you'll fix errors but still miss the strategies that launch you into the best interest rates and approvals. The secret is in my next video, the 7 hacks that boost your credit score fast. You don't want to miss it. See you in our next video.